Hello everyone and Assalamu alaikum, and thank you so much for taking out the time to join us for this special online event. I would like to welcome everyone, including our esteemed panelists and the audience, on behalf of all our organizers, to this first webinar of a two-part series that will be on taxation for growth in KP, with a specific focus on provincial taxes. These webinars are being organized by the Consortium for Development Policy Research in partnership with the International Growth Center and the DFID-funded Sustainable Energy and Economic Development Program in KP. As we all know that the ongoing pandemic has created a major fiscal challenge for Pakistan's economy, and which has already been struggling with the macro crisis, but it also presents at some level an opportunity to policymakers to bring about reforms, especially around taxation, that have previously been difficult to implement. So with an increasing pressure on provinces to deliver, there may now be a greater incentive to overcome the obstacles and disincentives that prevent provincial taxes from working to their full potential. This discussion will especially focus on the sales tax on services, and we have an excellent panel to highlight international best practices, cross-country learnings, as well as local provincial learnings that can potentially help find solutions to the challenges of implementing such a tax. We're hopeful that this debate initiated here will provide important and practical policy lessons for all provinces. Government of Khyber Pakhtunkhwa in particular has been very keen to transform the way it earns and spends its resources, and looking for ways to maximize its fiscal space to strengthen revenue mobilization, particularly around provincial taxes such as the sales tax on services and urban property tax. With that, I would like to now introduce our panelists. Okay, Annabelle hasn't joined yet. Okay, so I'm just going to start with Mr. Hassan Khavar. He is a senior international development public policy expert, and he's currently the team leader of SEED, a 5-year sustainable energy and economic development program in KP. He is also a former civil servant and has worked on multiple projects across many countries in Asia, and has a diverse, brings a diverse experience. Then we are glad to have Dr. Mazhar Waseem with us, who's a public finance economist. Dr. Waseem's research focus is on broad-based taxes, such as the value-added tax and income tax. He served in the civil service of Pakistan as part of the Customs and Excise Service. He currently teaches at the University of Manchester, and he holds an MSc and a PhD, both from the London School of Economics. Then we have with us Mr. Javed Ahmed. He's a tax economist at the Punjab Revenue Authority. He was also the chairman of PRA for a year. He has a diverse experience of taxation, public policy, public finance, and management, with training in both business and law, and has been instrumental in setting up the Punjab Revenue Authority. Then we're also delighted to have with us Dr. Michael Best, who's a professor of economics at the Columbia University. He was a postdoctoral fellow at the Stanford Institute for Economic Policy and has a PhD from the London School of Economics. He also has an MPhil from the University of Oxford, and his research focuses on tax evasion in developing countries and its implications of optimal tax policy and administration, and has also done some valuable work in Pakistan before. Also joining us shortly, we will have with us Mr. Taimur Chagra, who's the Minister of Finance for the government of Khyber Pakhtunkhwa, and before joining PTI, he was a partner at McKinsey and led its public sector engagement in Pakistan. And we will also be having Miss Annabelle Jerry, who is currently heading the DFID program in Pakistan. Before coming to Islamabad, she was heading the DFID program in Zimbabwe. She's just joined us. Hi, Annabelle. Yeah, and Annabelle has played an instrumental role in engaging with Pakistan's research community, enabling it to play its role in impacting policy with DFID's support. Before we go to the panel, I just wanted to say that we will be having a quick Q&A session at the end, and you can type in your questions while the panelists are speaking and we'll pick them up. Now I would like to invite Dr. Ijaz Nabi, the country director for IGC and the chairman of CDPR, to say a few words about why this topic is important and how such forums can be useful for seeking practical policy solutions. Dr. Nabi.
Thank you, Hina. Thank you for this putting together this great panel on an extremely important topic. Let me just spend a few seconds on CDPR and IGC and DFID. I will let Hassan talk about SEED when he speaks. Basically, IGC, the International Growth Center, is a consortium of London School of Economics and Oxford University. It is funded by DFID UK, and the idea is to promote top-notch research on issues of development across the globe. There are programs in 12 countries, including Pakistan, and India, and Bangladesh, and Myanmar in South Asia. CDPR is essentially a dissemination platform. It gathers the research that's been done by the IGC and by the IGC-supported research centers who work on Pakistan. And it puts out this research on several platforms. One of those platforms is what we call the Lahore Policy Exchange, which until COVID happened was a live exchange, in the sense that people came together under one roof. We had lively discussions, and then we would put out those discussions or summarize those discussions on the internet. But COVID has opened up this whole new avenue of reaching out and reducing distance to nothing. So Michael Best is sitting in New York, and he's with us in real time. I happen to be in Washington these days, and I'm with you in real time. And the sort of the geography, the distance in terms of geography has disappeared, which is wonderful. Now, a provincial taxation is critical. Everybody understands this, and it will become even more critical as we go forward, and as provinces assume greater responsibility in terms of delivering what I call to be the core agenda of development. And the core agenda of development is really human development. Health, education, policing, environment, local environment, cities development, all of these are fundamental and are core development issues. And the 18th Amendment devolves all of these now squarely to the provinces. Devolution in terms of expenditures has come first, but this will follow devolution in terms of revenues. And that's where this seminar and the seminar that we will hold next week, the two important sources of revenue for provincial governments, which is the sales tax on services and property tax. These are being discussed, and how to support KP to improve the revenue streams that come from these two sources. Now, sales tax on services is a very tricky area. Normally, you devolve the less complex taxes to the provinces. And in most countries, it's the sales tax on goods that's devolved to the subnational level. Services, not so, because services are complex and they cut across provinces. And typically, what people have in mind are financial services, internet services, telecommunication services. And these are generally structured at the national level. And therefore, the national level is where the taxes are designed. In Pakistan, when services were devolved to the subnational level, it was considered that services would be relatively simple services, like barber shops, restaurants, etc. But because now services have assumed this other dimension, it makes it a very complex tax. to be dealt with at the subnational level. And that's something that, that I hope the panelists will focus on. It's very important for provincial taxes to keep in mind the incidence issue, as the tax on services should not end up as an income tax. It is at the end of the day to be passed on to the consumers, and we must make sure that our tax structures do that. And there is the important equity dimension as well. We must make sure that it's not the poorest who end up paying a large proportion of this tax. So there are important structural issues, there are important tax incidence issues, there are important tax design issues in dealing with modern services. And I think this is where lessons of experience from Punjab, lessons of experience, international lessons of experience are going to be so important. We are really delighted that Javed Saab is here with us. He can convey to us what the lessons of the Punjab experience were. And Punjab did reasonably well, not on all of the criteria, but on some of the criteria of imposing sales tax on services. Wasim, who's an old IGC, old-standing IGC researcher, has done a lot of work on the tax structures of Pakistan, and he will tell us about the complexity of the sales tax on services. And Michael Best will give us an international perspective and where taxation theory stands on the whole issue of tax on services. I'm really happy that Michael is involved because Michael has done some pioneering work at the federal level. And I think given where we are in KP, I think it's a great opportunity for Michael to actually begin to put in place some great tax experiments, which will help KP government to expand the tax base for sales tax on services. So with that, let me hand over to you, Hina.
Yeah. So I'm going to now request Hassan to briefly outline the ways in which the DFID funded seed program is supporting tax reform in KP, who the key stakeholders are that they're engaging with, and how they view the importance of this tax for overall growth and in particular revenue generation. Hassan.
Thank you, Hina. Thank you, Dr. Nabi. And thank you all the panelists for sparing time for this very important webinar. SEED, Sustainable Energy and Economic Development, is a DFID-funded program. And under the first component of the program, DFID is working very closely with government of Khyber Pakhtunkhwa. And the aim of this component is to help the province generate more public and private investments, making sure that these investments are effective, and particularly the public investments are also more efficient. And of course, we are working closely with the finance department, with KPRA, with the tax authorities, with planning and development department, and a number of line departments. And the program has just started and will go on for the next 6 years. Now, the question of generating greater public investments historically has been centered around generating more revenues. But in the post-COVID world, I think that's not going to be enough. We will have to look at which way are we allocating the existing resources, what are the areas to cut down the expenditure or to make it available for development. So that's the other side that we are working on. But this is, the topic at hand is right now, sales tax on services, which of course forms the cornerstone of KP government's own revenue regime and its revenue collection. And it's very important. So I'll start with something that Dr. Nabi said, and that's phenomenal. That sales tax on services is perhaps the most complex tax, but it's assigned to that tier of the government, which probably has minimal capacity. Provinces have been gearing up over the last few years, but still I think FBR, the Federal Board of Revenue, is far ahead. So this is kind of an anomaly, but this is the way things are. But I think a consequence of this fact is that traditionally provinces have relied more on private sector capacity. So we can see that sales tax on services generated from telcos takes a larger share because these are well-structured large corporates. It's easy to collect tax from them. But that also means that some of the more difficult areas, which have a lot of revenue potential, like transport, travel, wholesale and retail trade, have somehow been not as big a claimant in the local revenue generation. So I think that is something I would just like to park. And I think SEED would very much like to help government of KP in moving ahead in these areas. I think the second is the balancing act. The balancing act between the appetite for more revenues and helping the private sector grow. And I think going forward, both of them are going to be equally important priorities for government of KP. The federal fiscal transfers we have seen this year have gone down. And in the next 2 or 3 years, the growth projections are low. And I think governments, all provincial governments are going to have a hard time. So revenue mobilization will be a very important priority. But at the same time, private sector also needs space to breathe, needs space to continue to operate profitably. And I think provincial governments all across Pakistan are very much cognizant of that fact. And if you look at KP, for example, for the next year's budget, the government has reduced sales tax on services for 27 services to help them sustain this crisis. I think the key question is that as governments, KP in particular, but other provinces also, make these relief measures available for taxes, are they also doing something for reform? So what I mean is that, is there a way to make sure that sacrifices of today lead to revenues for tomorrow? Are we also moving towards documentation? Because difficult times create appetite for more revenues, but it also create appetite for more reform. So are we using these tough times to take those decisions and moving on towards reform? So I think that's the other question. I think thirdly and lastly is the thing that as governments will face fiscal pressures, the fiscal incentives to help businesses grow would become more rare. And as they would become more rare, it would mean that provincial and federal government would have an increasing pressure to make the regulatory environment more friendly for the businesses. And I do think that tax administration is one of them, because when you go into the detail of classifying goods versus services, you look at corporations operating across all 4 provinces, there are businesses that have to file 60 returns in a year. So are we doing something in that? So are we looking at sales tax on services at the sub-national level in a silo, or is there a way to look at across the national level? And I think it's an opportune time for that, because all the provinces have signed a memorandum of agreement. National Tax Council has been notified, but I think more work needs to follow on that. And I think this is where we really hope that DFID, through programs like SEED, and there's another program, Subnational Governance, are able to help government of KP navigating through these challenges and creating that fine balance where they are creating more revenues and making that fiscal space available for development, but at the same time, also letting private businesses breathe and operate. Thank you.
Thank you, Hassan, for raising those important questions. And before we delve deeper into this issue, can I request Dr. Mazhar Waseem to just briefly describe the structure and the design of sales tax, its objective, the expected impact, while also highlighting some key challenges in its implementation and governance.
Yeah, so thanks a lot. So I will have to share my screen because I have a slide, very short presentation. So
Mazhar Saab, you're now the host.
Yeah, so probably you can see my screen now. Okay, so I have been asked to talk about the structure and design of this tax, highlighting its weaknesses and suggesting any areas of improvement. And when we talk about the design and structure of this tax, we have to go back and look at its genesis in Pakistan. So at the time of independence, we inherited Government of India Act 1935 and adopted it as working constitution. So the Government of India Act was based on a federal structure with powers demarcated between federation and provinces. And the legislative power to levy sales tax on supply of goods and services was a provincial power. So soon after independence in March 1948, we changed this slightly in the sense that we federalized the power to levy sales tax on goods. The power to levy sales tax on supply of services still remained a provincial power. And exercising these powers, the federal government, they implemented these two sales taxes, so one in 1948, another in 1951. But still, up to 1990, sales tax was a very minor and unimportant tax in Pakistan.
Dr. Mazhar, we can't see your screen. So agar aapne slides on kiye, we can't see them. Maybe you should, maybe you haven't.
Yeah. You have to click another button right after you click the screen you want to share.
But I thought Mazhar was doing very well without the slides.
No,
So,
that's why I thought he dropped the idea. Maybe
and sometimes slides can be a little distracting also. So I
Can you
think
see them now?
Yes, we
Yes.
can see them now.
Okay. Yeah, sorry for this technical hiccup.
no, but
So
what we
I
were
was-
seeing earlier was much better, but that's okay.
So I was going through the history of VAT in Pakistan. So up to 1990, sales tax in Pakistan was still a very unimportant and minor tax. But in 1990, we went for a major reform and we decided to organize it along VAT lines and decided to make it into a VAT. And because the government could not afford to impose a new tax in one go, so this implementation was kind of staggered into phases. So the tax was started with a very narrow base, and then this base was expanded sequentially over time, especially between 1996 and 1999, this base was expanded rapidly. And by 1999, so this tax had been expanded to all areas of economic activity in Pakistan, so other than services. Services was the last frontier, and the difficulty was that I already explained, that the power to levy sales tax on supply of services was a provincial power. The federal government could not do it on their own. So what they did was they got all the provinces together, and these four provinces, they issued these, they imposed the sales tax on services, a provincial sales tax, but they delegated the authority to collect this tax to the federal government and FBR. So these ordinances, so they said, so this is a provincial sales tax, but it will be collected in the same manner as if it were a sales tax under the Sales Tax Act 1990. So for all practical purposes, it was like collected in the same manner as a federal sales tax on goods. So just after 2000, so we had something like a textbook VAT in Pakistan, in the sense that we have a broad-based consumption tax, which covered all areas of economic activity, and only one revenue authority was responsible to administer it. So this changed again with the 7th NFC vote in 2010, when the power to administer sales tax on services was again devolved to provinces. And after that decision, the provinces, they created their own revenue authorities, they introduced their own legislation, some earlier than the others. KP, for example, it in 2013, and from that point onwards, so this is a provincial tax administered by the Provincial Revenue Authority. Okay. So if we look at India, so most of the history since 1947, for most of the times, so India's consumption tax regime was more complicated than ours. And the reason is, I have already alluded to, so we started with the same position because we inherited the same legal framework. So the central government in India could not levy sales tax on services or on goods. So compared to Pakistan, India did not federalize this tax anyway. So they did not introduce the 48 amendment, which we did. So in India, the power to impose sales tax always remained a provincial power. But this tendency to centralize revenue collection was also there in India. And this manifested in the form that what Indian government, central government did was they imposed a lot of excises. So they imposed a lot of federal excises on supply of both goods and services. And parallel to this excise system, so there was a sales tax system operated by provinces, which are called states in India. So they had their own sales tax. And at some, this was an incredibly complex system. And because excises are a very bad way to do consumption taxation, so India was always under pressure to reform its consumption tax regime. And these are few of the efforts. For example, through these two efforts, so some features of VAT were introduced into the central excise regime. And then the states, they reformed their own sales tax and modeled it along the VAT line in 2005. Not all states, but most of the big states. They reformed their sales tax and turned it into a VAT. And the final piece of reform came in 2017 when all these consumption taxes, so they were combined into one single tax to be administered by single revenue authority. So this is called goods and services tax. So it's a VAT. It is administered by a central revenue authority overseen by a GST council. And GST council comprises, so it has two members from the central government and one each from each of the 28 states and three union territories. So now India has a unified single VAT. So the purpose of going through the history of this tax in Pakistan was to show that VAT in Pakistan has a fragmented base. Fragmented base in the sense that the part on goods is a federal sales tax and it is administered by FBR, and the part on services is a provincial tax which is administered by provincial revenue authorities. And this fragmentation has consequences. So obviously, so there is an obvious problem that classifying transactions cleanly into whether they are transaction of involving supply of goods or supply of excises or supply of services is not always easy. So there is always a line drawing problem, but I will abstract from it and focus mostly on the other two issues, which in my opinion are more important for the Pakistani context. So the first one is production efficiency. Production efficiency is the idea that the tax should not interfere in the production decision of a firm. So one of the key reasons that VAT is such a popular tax is because it preserves production efficiency. And it does so by allowing full adjustment of tax paid on inputs acquired by a firm. So this full input tax adjustment, full adjustment of tax paid on intermediates and raw materials make VAT a production efficient tax. But when the tax base is fragmented and multiple revenue authorities are administering it, so then this full adjustment of input tax is not straightforward. For example, if we take the example of KP, let's say there is a KP company supplying services. For example, let's say there is a gym. So gym is supplying services, but to supply those services, they have to buy fitness equipment. Fitness equipment is a good. When they acquire fitness equipment, so there will be federal sales tax, which they will pay. And because if the KP government allows adjustment of that federal sales tax, If it does not allow it, then it becomes a production inefficient tax, and it has serious consequences.
Mazhar Saab, I'm going to just interrupt. So your 7 minutes are up, but we'll just give you an extra 1 minute.
Yes, so I will try to finish it in next 2-3 minutes. Yeah. Okay. So if they do it if they do not allow it, then the tax becomes inefficient. And if they allow it, then it's unfair to KP, because the tax collected by the federal government is being deducted from their revenue. So this full adjustment of input tax requires two things. So it requires a transparent accounting mechanism where every revenue authority can see where their input tax is adjusted, by whom, and how much. And second, so once this has been determined, so then there has to be inter-authority transfer of funds. This has to take place on a monthly or quarterly basis. So right now it's not being done, despite the fact that this tax is now 5, 6, 7 years old. So if we do not do it, so then this non-adjustment and non-transfer of taxes across revenue authorities, so this is creating winners and losers. So ultimately, the amounts involved will become so much that this will create tensions, and there is a likelihood that this full adjustment will break down at some point. And it did break down in 2016 when the federal government, they introduced this legislation and they said, we will not allow adjustment of input tax paid at the provincial level. So rightly, there was a pushback against this legislation and this was withdrawn, but this could always come back to haunt us unless we sort out these issues. Okay, the next is compliance cost. Hassan has already alluded to this. So this is sales tax return in 2003, our sales tax return. And probably most of you cannot see it, but that's okay. So let me tell you that it's a single page return with 25 columns. And so this return covers both goods sector, services sector. A firm has to file only a single return. And because it has only 25 columns, so any half literate person can fill it like in 1 hour if they wish. So now KP sales tax return is 5 pages. So if a KP company is supplying services in all 5 provinces and federally administered Islamabad area, then they have to file 5 returns, so which means 25 pages. But this 25 pages is like the minimum length of the return, because the 4 pages, they are annexures. And in these annexures, the firms have to report the transaction level data detailing all their purchases, transaction-wise, all imports, all sales, all exports. So potentially, if it's a middle-sized firm, so it could be like, so if it's a very small firm, so the return will be 25 pages. If it's medium size, it could be 50, or it could be 100, or it could be many hundred pages, depending upon the number of transactions they engage. So the idea is that the filing regime is becoming more and more complex. And so this is not only about the length of the return. So then there is a non-trivial work of apportioning input tax across goods and also across services within 4 provinces. And once you have done all this apportionment, then you have to decide about the origin rules, because with services, so if service is originating in one province and is culminating in another, so then you are not sure about where that service has been provided. And my sense is these origin rules, they have also not still been harmonized across provinces. So my sense is the existing system has become
Sorry,
so...
We're running short on time. We have a long list of matters. So I'm just going to, if you can just take another 5 seconds to wrap it up, and then we'll move on to the next speaker. We'll have a quick question and answer session where you will get a chance to talk more about this.
Yes, so the idea is this system has become increasingly complex. So this because of this fragmented base, it has 2 main consequences. One is production inefficiency. My sense is it's still not a serious issue, but it will become a serious issue unless we sort out these. And second is our filing regime has become more complex. We are imposing too much compliance cost on firms. And unless we do it, we will be discouraging firms to enter into the tax net rather than encouraging. Yeah. And
Thank
now,
you, Dr. Wasim. I'm sorry this had to be rushed through in the end because I mean what you were saying is extremely important. The importance of the tax for provinces and the complexity of the tax. We need to discuss both in order to come to grips with it. And I think let's use the question answer time to expand on some of these things further. I'm going to take this opportunity to welcome Finance Minister Jhagra. Welcome, Minister Saab. It's wonderful that you can join us. In about 15 seconds, let me summarize where we are, where we've reached. Basically, the importance of provincial tax was emphasized. At the federal level, we've got major inflexibilities in our expenditure, and if the fiscal deficit is to be avoided, both federal but extremely importantly, the provincial tax base will have to be expanded. And within that, the two important taxes are the property tax and the sales tax on services. Today's webinar is focused on the sales tax on services. We have three speakers. Mr. Mazhar Wasim, who understands the federal tax extremely well, has summarized the structure of the tax, the complexity of the tax, because typically at the subnational level, we have it's the sales tax on goods, which is assigned to the provinces because it is relatively easier to implement. But in the way our own tax legislation has developed, we have kept sales tax on goods at the central level, but we have given the sales tax on services, which was fine as long as services were simple, barber shops, restaurants. But now we have financial services, or banks are involved, we have telecom services. These are complex services at the national level. And assigning this tax base to the provinces with its limited administration capacity has imposed challenges. And what we're trying to do in today's discussion is to identify those challenges and suggest some ways forward. After Mr. Mazhar Wasim, we have Mr. Javed from Punjab. He chaired the Punjab Revenue Authority for a while and has continued to support the PRA since then. He will talk about the Punjab experience, and then Dr. Michael Best, who is currently based at Columbia University, but also has a long-standing interest on research on taxation in Pakistan. He will talk about the international experience, and I'm particularly excited that Michael is with us because this gives us an opportunity to actually design some experiments in KP, because we're at the early stages of reform. And these experiments can be extremely helpful in expanding the tax base for this complex tax. So with that very quick summary, welcome again, and let me now hand it back over to Hina to continue the discussion.
Thank you very much.
So I will now request Mr. Javed Ahmed to briefly share with us his experience of setting up the Punjab Revenue Authority and Punjab's overall experience in implementing the sales tax, highlighting key lessons that may be useful for other provinces. Javed sir, please keep it short, so 5 minutes.
So I'll try to be brief and short. Thank you very much for inviting me on this webinar. Let me start from Mr. Hassan Farooq's pointer towards the major share being doled out from the telecom sector. It's not true. To begin with, that was true. When we started collecting in 2012, the overall share of the pie was 78% by through the telecom sector. But over the years, we have reduced it to almost around 20-25% now. And there was a great setback as well through the Supreme Court decision in year 2018, when the telecom service tax was altogether suspended. So for the last couple of years, we are not getting our due share from that sector. And moving further, when we see the overall GDP growth patterns in our country, transport and storage is a big sector, and we are not been able to cap that very opportunity. And then there are some other, there's probably the housing sector and the government spending on the government provision of the government sector sectors. We are not able to get hold of that because of the unfortunate decision by the Supreme Court that the federal entities are out of the purview of these provincial taxes. So now coming towards Mr. Mazhar Wasim's point that there are multiple compliances and there are so many returns, complications, things like that. Let me apprise this in this house that we have moved towards a uni-return. And in fact, we have completed 80% of our task, and PRAL is working on that, and the prototype is prepared. So by the launch of that uni-return, the things will be very smooth. And we are also thinking in terms of reducing the compliance, the number of compliances by introducing the quarterly returns for the smaller sectors. So now, moving back to our experience, the PRA experience, we started in 2012. From the very onset, we faced a type of resistance. One is the usual one, and that is from the business community, and the other one, the unusual one, and that is from the FPR. We started from FPR's borrowed force, and still we are banking heavily on the borrowed force from FPR. Those are placed at the strategic level. But let it be very clear, and I'm candid enough in admitting that they have supported us in a very crucial phase of our existence through a consolidation stage. But from the very outset, we figured it out that technology is the solution. So we shifted our focus onto that part of the strategy. So PRA was, alhamdulillah, the first one to introduce a restaurant invoice monitoring system, and that was electronically placed at the restaurants, and that was also focus of many research inside the country and internationally as well. Then taking lead from that, we further moved and we have included so many other sectors into that, and that is by introducing an overarching electronic invoice monitoring system, which means that we can place these electronic invoice monitoring systems to so many sectors where the point of sales are. And similarly, we have complemented this with our state-of-the-art and newly introduced, from taking lead from B2C, we are now inching towards B2b Electronic Invoicing. We are making it mandatory with a 1-year incubation period starting from 1st of July. We have introduced an odd law. And in fact, I must acknowledge that this is not because of the COVID-19 that we are moving towards these sort of links. We have started it, we had started it a few years back, that in the presence of a shortage of qualified and adequate HR, we have to move towards the technology. We have to heavily bank upon the technology. So we were the first one to establish the e-codes in order to eliminate or reduce the compliance cost from the business standpoint. So that is a successful venture. And then we have introduced also some of the softwares which could internally monitor our activities of the officers in the shape of the PRA Mirror and the PRA Eye. And then now we are moving towards the faceless audit as well. From this year onward, and this I think is futuristic, and in the presence of the COVID-19's problems, in order to overcome those problems, we have introduced that there should be no contact between the taxpayer and the tax collector, and audit should be done through a faceless audit scheme, which is electronically compatible, and everything will be done electronically. And from that point, we have already started the mass audits, which means that you need not to come to our offices. We will select a criteria and do the mass audits. So that's a very successful sort of scheme. Apart from that, we have also introduced e-filing. Our system, right from registration up to the filing of return, it's all electronic. And so is with every revenue authority. KP is with us, SRB is there, and BRA is there. So everyone is doing a bit on that front. So apart from that, we have also introduced one more system, and that is the from PRA point of view, and that was in my mind that we have to reduce the compliance cost. So we have, after linking these transactions electronically on real-time basis, we have launched the pre-populated return, which means the return will be automatically electronically filled in when everything is joined electronically through a system on the real-time basis. So coming towards challenges, during the recent times, there are some problems that we are reducing.
Mazhar Saab, I'm sorry to interrupt, but if you could very quickly inform us about two things. One is, what has been the revenue impact of all of these measures that you have put in place? You must have tracked the annual revenue yields, and it'd be great to see how whether we can correlate these with some of these actions, including the use of technology and legal reform. And importantly, also, if you could shed some light on whether you do any client satisfaction surveys. Is life becoming easier? Because that will be something very useful for KPK to see whether they can implement something similar.
Very right. Starting from the restaurant invoice monitoring system, we have a growth rate, increased growth of about 28% in the revenues. And we coupled it with a robust reward scheme that was in the shape of the giving rewards in terms of cash prizes, in terms of the cars, in terms of other things. And that went well. So that was successful. Very recently, we have introduced the tax payments through debit cards and credit cards. But we are facing some problems on that, because since this is primarily for the implementation of the documentation of the economy, so from the restaurant sector, we are facing problems of input adjustment and all that. So from the second part of your question is that overall growth rate is quite healthy. But for the last couple of years, we are going down mainly because of our inability to get the proper share of the telecom sector tax. So in the year 2018 and 19, we touched 110 billion, starting from the 22 billion in 2012-13. But then the next year it was 94 billion, and this year we have just touched 108 billion. So things are gradually improving. So there is a greater share of these electronic measures in our overall efficiency and the growth rate hike. So we conducted a survey lately, but that was an informal sort of survey. People do appreciate, especially the tax bars and the ICAP people, they do appreciate these innovative sort of measures. But I think this will take time. As long as these measures are not complemented through the efficient use of the HR, through effective enforcement, so things will not yield the desired results. This is my personal opinion. So any other questions?
I think you should complete your.
So just your time is up, so just take 1 minute to wrap up, please.
So in 1 minute, I can only thank you people and From the KP point of view, I think the major businesses in KP are consisting of the SMEs. And the SMEs, I think, by and large, they're not regulated sectors. So they're, to give them a fair and equality-based taxation system is a big challenge. So they have to work on that, because in order to lure the potential service sectors, you have to work very hard. You have to be very consistent in your tax policies. You have to be very futuristic. And by and large, to my experience, it is the workforce which delivers. And unfortunately, we are lagging behind in that. All of the authorities are lagging behind in that. I think instead of recruiting the traditional workforce, we should focus on the technology-led, technology-driven workforce, which could be the real driving force in future. Thank you so much.
Thank you, Javed Saab. Before I speak, as I request Michael to speak about international experience, Michael, keep in mind, sources of income and overall financial flows have a lot to do with determining the tax base. And KP has some very special features as far as its financial flows are concerned. KP is disproportionately the largest recipient of remittances, overseas remittances. That creates a dynamic in the economy and defines the tax base in a very interesting way. The question is, how can the sales tax on services capture that dimension? KP is also experiencing, has experienced until very recently, a huge consumption boom financed by services, which means that retail has expanded very, very rapidly. And what that means in shaping up the tax base for services in KP is something that needs to be kept in mind. And I think that the real estate business has also seen a major increment in the last 3 or 4 decades. And again, we need to consider how services can capture that expansion of the economic base of the province. So keep these in mind as you draw upon the international experience.
So, Michael.
Fantastic. Yes. You can see my slides, right?
Yes, we can.
Perfect. Thank you so much to the organizers for putting together this session. I think it's crucial to
for Mr. Jagra's information, Michael Best is a professor at Columbia University. As a PhD student at London School of Economics, he spent many years and many months in the trenches of FBR in Islamabad. So he understands Pakistan's tax systems quite well.
Okay. I try my best. Okay, so what I want to try and do is sort of zoom through 3 things. I'll try and be as quick as I can. I want to talk a little bit about the design of taxes on sales. Then I want to spend a bit more time on talking about enforcement, and then zoom through some tools that have seemed to have some success in other settings and might be applicable to the KP setting. So as always, when we're thinking about the design of taxes, we face this big trade-off between trying to make taxes equitable to make sure that people are paying their fair shares, and the efficiency consequences of taxes, that they don't sort of diminish the overall size of the economic pie too much. And so when we think about sales taxes, we usually have these 2 thoughts in mind in terms of equity. One, that poor households tend to consume a greater share of their income. And so this raises the issue that sales taxes are often considered regressive. And the second one is that poor and rich households consume very different baskets of goods. And so you might think that it's a good idea then to have lower rates on the goods that are overwhelmingly consumed by poor households and higher rates on luxury goods overwhelmingly consumed by rich households. On the efficiency side, there's some sort of foundational theoretical work showing that it's more efficient to do redistribution from rich to poor households through income taxes and income transfers. And the sort of underappreciated link between the design of the tax and the enforceability of the tax is that if you start playing around with different rates on different types of goods, that creates new things that the tax authority has to verify. And that's going to provide opportunities for people to find places to cheat and make it harder for taxes to be enforced. So there's actually a very nice recent paper that tries to think about the equity part of this. So this the picture that you see here on the right is on the x-axis. On the horizontal axis, you see households ordered by their income. So the richer households are on the right and the poorer households are on the left. And then the vertical axis is what fraction of their income they spend buying things in the informal sector. And so you see this very clear downward trend that poor households overwhelmingly buy things from the informal sector and rich households don't. And so what does that imply for the design of sales taxes? Well, it means that since sales taxes are only really targeting the sales of products in the formal sector, even if you have the same sales tax rate on all goods, it's going to be overwhelmingly paid by rich households. And so that means that the benefits of using the sales tax rates to do redistribution are much smaller than we think they are. And if the costs are the same, this makes it look less attractive. Thinking a little bit about enforcement, there are three, I think, key lessons from the literature so far. One is the importance of being able to gather and use third-party reports. So information flows are the backbone of tax enforcement. I think that's not controversial. And so we know, for example, from this experiment in Denmark, that when there is a third party that reports what the income liability is, examples being things like employers reporting wages, their evasion is less than 1% in Denmark. While when there is no such third party, when people are, for example, self-employed, the evasion rates that are detected are around 17%. And this is Denmark. So you can imagine how those numbers look in different types of settings. And in fact, Mazhar has this fantastic paper that tries to estimate exactly this. He finds, again, some sort of around 1% for wages and about 70% for self-employed income. This is income, of course, not sales, but you can sort of see where this is going. The second lesson that we've seen play out around the world is that business-to-business transactions have higher compliance than business-to-consumer transactions because of this invoice credit mechanism. Every time there's a transaction between two businesses, that generates a tax liability for one side of the transaction and a tax credit for the other side. The problem with this, of course, is that that mechanism, the opposite incentives, breaks down when you get to the final consumer. Final consumers don't get a tax credit, and so they have no incentive to ask that final sales are reported to the tax authority. And this is likely to be a particular problem for services, since services are more likely to be provided to final consumers than to other businesses than goods are on average. And so this is important to keep in mind in this setting as well. I really like this picture because I think it summarizes everything. So this is from a paper that uses banking data in Greece to try and estimate creditworthiness that's implied by banks' loan decisions and use that to what those businesses are reporting as their income. And so you can see all the different sectors. I hope you can see it at least. So the things that are interesting are the ones that are higher up are the ones that are estimated to be evading more income tax. And so there are some that maybe are not as obvious as you might have thought. So the very, very top one over here is medicine. That's a service. Law, that's a service. Education, service. Engineering and science. These are all services. Lodging and tourism, these are all services. And so we might, provision of professional services is somewhere where in the Greek context, at least, tax evasion is rampant. And so that's a key challenge to enforcing a sales tax on services, probably also in KP. Coming to the tools in my last 30 seconds, I think there are three sets of tools that are important to keep in mind. One is incentives. So we want to think about tools that help leverage the incentives of final consumers to get them to generate the paper trail that the tax authority needs in order to be able to enforce compliance by sellers. So this has been done in several different ways. For example, in many countries, there are lotteries around sales tax receipts. So each time you generate a sales tax invoice, that generates a lottery ticket. Of course, it's important not to frame this as gambling, but to frame this instead as prizes, for example, as was done in Punjab with the restaurants. You can offer people cash rebates. You say, well, if you ask for an invoice, then you can use that invoice to get some portion of the tax paid returned to you in cash as a consumer. That generates that paper trail. And in a lot of Latin American countries, one thing that's quite common is tax credits. So for example, if you keep the bills from your doctor's visits, you can use that as a credit against your income tax liability as a final consumer. But then you're forcing the doctor to issue that invoice, which can then be used to enforce sales taxes and income taxes on the doctor. An extremely powerful tool has been withholding. And so, for example, the basic idea there is grab the money wherever you can see it. So who are the people where you can see the transactions relatively well? There tends to be transactions where the government is one of the parties, or where very large firms like telecoms firms or intermediaries like credit and debit card companies are firms. So this picture over here is a picture from a paper by Brockmeyer and Hernandez that looks at the introduction of this type of system in Costa Rica. And so what you can see is this red line jumps up immediately after the introduction of this type of a system using credit and debit cards. And that's the tax liability jumping up of people who are subject to this type of withholding versus the group that's not subject to this. So this is an extremely powerful tool that has been used successfully in many other contexts. Finally, a lot of service providers are small and medium-sized enterprises. And auditing any type of firm is an extremely expensive endeavor. And so you don't want to spend $10,000, $15,000 doing an audit for a firm that only has revenues of $50,000 a year. And so we need to think creatively of what are some low-cost alternatives to doing full-scale audits. So there's a nice project that's ongoing in Rwanda by Isa Gerard and Zeitlin, where they use mystery shoppers just to get a sort of a signal. So they send people to shops and say, go and buy a toothbrush and ask for a receipt, and see how often they actually get the receipt. And in that setting in Rwanda, they find that only 7% of the time they are issued the receipt. It's a low-cost way of gathering information on who are the people who are being compliant. I think Javid just said everything much better than I could have about the importance of using technology, so I'm going to skip that in the interest of time and focus finally on third-party data. So as more and more of the economy gets recorded in digital data, we can start pulling all that data together to form very, very rich pictures of how people spend their money. And with that data, you can then also figure out what their likely income and sales are. And that can be an extremely powerful tool for figuring out who are the people who are not being compliant with their taxes. There are also third-party sources of data on who are the people who should be paying taxes at all, things like the ledgers of chambers of commerce or professional associations that are often not automatically linked together with tax data. And that seems like a low-hanging fruit for figuring out where to look for the compliance. Thank you so much.
Thank you, Michael. Hina, I noticed that we have quite a large number of questions from participants. Maybe you can start taking those. But maybe Mr. Jhagra wants to say a few words before we get into the question-answer session.
And then we have Annabelle.
And we have Annabelle, of course, and we'll ask Annabelle to say a few words as well.
Well, thank you. By the way, I've got Karan Jamal with me over here as well, who's the Minister for Excise and responsible for the other part of revenue generation here at the provincial level. I'd like to thank you all for inviting me here. The presentations are obviously very informative. Just want to share a few general thoughts. I'm being told to look at the camera, which then feels unnatural because I can't see you guys. Anyways, I'll do a little bit of both. The 2 or 3 things that I wanted to share, I just was looking at the email that I got before. I think as rightly pointed out, there are a lot of issues and challenges in terms of both provincial revenue generation, but also in terms of sales tax on services. And just want to step back, and as I've stepped into this role from a corporate career, just a few sort of first broad-based reflections on things that didn't make sense. Whereas Dr. Ijaz Nabi and others said, it seems like our overall tax system is broken. You yourself mentioned that, in many systems, it'd be the sales tax on goods that would be at the provincial level. And I don't think that's the only anomaly. For example, we've spent quite a lot of time trying to see how we increase the revenue base of the province. And it struck me, for example, it's not related to today, but why we have this constitutional right to collect agriculture income tax, which bifurcates in income tax, treats agriculture income tax differently, and creates this rent-seeking opportunity for income to be parked over there. On sales tax on services, and in general, in terms of provincial ownership of tax policy, I find the relationship with FBR very strange. You can argue about what the provincial versus federal shares would be, but just as food for thought, I find it quite strange that at the end of every month, we get transfers from FBR on their tax collection, and we get the bifurcation of that transfers into a number of different heads, but we don't actually get the associated FBR collection. So I typically have no way of knowing what I'm actually being paid against. And it feels like an incredibly unnecessary obfuscation of information that should be available to all. And so in the last year, to get over this, we designed a system where we actually get FBR's revenue collection figures from the Dawn newspaper, and that allows us to at least simply model two things. One, whether we're getting the right share, and two, actually allows us to project what sort of revenue inflows we're going to get and how to sort of strategize our spending. And it's made an incredible difference, but it actually shows an incredible lack of coordination that of course manifests itself also in the issue discussed on the input adjustments, which is important and sort of breaks the entire system down, in particular for a province where revenue generation is relatively low. I think in general in Pakistan, amongst the smaller provinces in particular, there has been a general belief that we can't crack this revenue collection issue. And I do think also based on the NFC discussion that both are happening in public right now, as well as what I witnessed over the last year, it is incredibly important that if, as mentioned, that if we are to crack how to increase the overall revenue collection in the country, that we really stop making this a zero-sum game. At 4 trillion FBR collection plus whatever the provinces collect, no matter whatever way you divide the pie, we're not going to have anywhere near enough money to be able to spend on basic services in the way we need it. So the one thing that I don't actually agree with is that federal costs are rigid, because I think similarly provincial cost bases are equally rigid, and there may have been a windfall after the 18th Amendment, but that windfall has now been locked into additional hiring, some cost perhaps that is unjustified, but also relatively large investments in education and health, which show up as more teachers, more doctors, etc. in the system, but those costs are now inflexible. Before turning it over, just do want to share a little bit of good news and what we did. I was looking at the figures that were floated around, which showed KPRA collection at about 10 billion in the last reported year. So KPRA did collect 10 odd billion for about 3 years in a row, 18, 19, 17, 18, 16, 17. which all fits with this cliche of a province like KP not being able to increase tax revenue. Partially in 1819, it was because of the issue with the telecom taxes. But in the last year, incredibly, despite COVID, KPRA's collection increased from 10 billion to north of 17. That's a 70% improvement in a year. Without COVID, it would have been north of 18. And with COVID's impact in the last 3 months, I personally expected it to drop down to about 15 and was incredibly happily surprised that the relative drop was just to the tune of about 8 billion. And I'll tell you why I think that was. Some of it was because we are indeed starting to, well, I think primarily it was because for the first time, it was an explicit priority to raise revenue. And even though we have capacity issues, throughout the year until COVID came, we were reviewing performance monthly. We were analyzing our data in a relatively scientific manner for the first time in terms of understanding where money is coming from, where the opportunity is. We were looking at both geographic and sectoral expansion, and we did geographically expand. We were looking at pockets of revenue that are stuck in the system. So we actually managed to solve all of our payment issues with the telco providers in the second half of the year. So I think and we also ensured consistency of leadership and an investment of resources in KPRA for the first time. So there's a stable team with stable support. And I think you see the results way beyond what perhaps even my own realistic expectation would have been. And there are a couple of things that played into it. What we did do in the first half of the year, other than reviving the organization, we'd spend a lot of time on making the right plan, but was to put in about 6 months to try and create a simple but aligned to organization objectives, incentive plan for the organization. And we looked at a lot of things. We looked at individual objectives, KPIs, we looked at what FPR was doing, we looked at what the rest of the world was doing. In the end, we created something that created an organizational incentive on reaching certain targets and then a set of non-financial followed by financial targets. And I think that was one of the things that actually, because it did in hindsight appear to be well crafted, that actually drove the continued impetus on revenue collection through the 3 months of COVID. Because I can tell you that I personally reviewed KPRA performance on a monthly basis for the first 9 months of the year, but then never did it through COVID times because I also have the health portfolio, and that obviously became a more important immediate priority. But when I started looking at what they'd been doing again in May, they had surprisingly continued to try and find the right money where it was available. And I'm sure that if we now do some sort of survey or analysis, we'll find that a fair bit of it was because the organization had the right incentive to continue to perform well. One thing we tied it to, by the way, that was interesting, Dr. Ijaz Nabi talked about a customer satisfaction survey. When we approved the incentive program, we made it contingent on 2 customer satisfaction surveys, one at the time of approval in January, February, and then a follow-up that will now happen at the end of the year. And I can certainly tell you both in terms of the January, February results, but also in terms of the feedback that I get from businesses and SMEs. I think taxes are unpopular, but the KPRA experience of dealing with customers, it's a small organization, is not one where customers have complained of rent seeking. And the sort of professional behavior that is displayed is one which I think we have been able to use to sort of build on increasing compliance. Now, there's lots of challenges that remain. We've, of course, tried to do a number of, there's a lot of duplication of taxation between KPRA and excise. There are sometimes territorial issues between the definition of goods and services between federal and provincial. There is origin, destination issues between provinces. There is indeed a harmonization initiative happening at the federal level that we are a part of and that I support, although at the same time, I think that there are, given the peculiarity of the sort of tax structure and tax paying culture in Pakistan, that there are specific things that we should think of, that I think it is better that as federating units, we have the right to sort of continue to use. So for example, before COVID hit, we were in advanced discussions with hoteliers to say, you hate paying the bed tax, you don't pay the sales tax on services. Let's eliminate one if you agree to pay the other. And we actually found a lot of traction by starting to use this as a quid pro quo to get specific industries to sign on. But it takes quite a lot of granular work to get it done. And my fear is that sometimes something like this, when we start to harmonize things, actually makes you more inflexible in terms of being able to take local action. And as we were doing this, I got the World Bank to agree to some flexibility in terms of how we approach this whole harmonization exercise that they are driving. So there is indeed a lot to do. I've not covered everything. I did want to give a little bit of perspective on the fact that what gives me a lot of hope, and I hope to use a lot of the organization has managed to do in the last year, is actually pretty significant. Because indeed, this is not an organization, this is not a province that has really prioritized revenue generation, certainly not in terms of tax collection. And I think that, I think this year will be a challenge. I think if we grow to 20 plus, will be an incredible achievement, because I know that a lot of the service sector is really, really bleeding. I think there's a lot of gray in terms of what the targets are. But I think the level of growth shown, and then the sustenance of that growth through the COVID period, is something that actually gives me a lot of hope in terms of what we can do. And I would hope to continue to build on this using a lot of the input that comes from a lot of the faces, many of them familiar, that I see around here. Thank you.
Thank you, Jhagra Saab, for this fantastic overview of the situation in KP regarding revenue generation. You know, some of the things that that Michael and Wasim and Javed Saab have talked about will nicely further deepen the ongoing efforts that are being done in KP, and I think they're useful international and other provincial lessons that can be drawn upon. The coordination issue, you're absolutely right. It unfortunately, after the 18th Amendment, there was an even greater need for improving coordination, so that we have national standards, so that the Federation plays the appropriate role of assisting the provinces in achieving their growth objectives. And unfortunately, it's gone south, that the whole coordination at the federal, between the Federation and the provinces is not really kept pace with the decentralization that's ongoing. And that's something I think people in the Federation are keenly aware of, and hopefully are in consultation with the provinces to strengthen that. Let me now request Annabelle to give her views on this subject.
Thank you so much, and I'll be brief. I know taxes need to be efficient, and so do I, since I can see the number of questions coming up there in the question box. And you didn't know this, I actually used to be a tax lawyer in my former life, so it's very interesting, this discussion. So thank you for organising it and for giving us all a head stretch and a chance to compare experiences within the country as well as internationally. It's been really fascinating to hear that. And I think you missed at the beginning, Minister, that we're funding obviously the SEED programme you know about, and then IGC, through the UK is a very important partnership that we have on research and bringing research into policy. So a very good event. I think it is incredibly encouraging to hear the difference that can be made, and we've heard about that in the Punjab and KP, and I think remembering that this is possible is incredibly important, particularly where we've got these complex politics between the provinces and the federal. So that's the sort of first thing I really take away, very striking from this conversation. I mean, in terms of the issues, broadening collection from different sectors, the idea that Professor Best brought in about different registration sources, balancing the need for private sector to manage through crisis, and relief measures as well as the revenue mobilisation. I think that balance is really very critical, that was talked about as well, especially at the moment with COVID and thinking about how we will get a resilient recovery. I think this point about inefficiency due to fragmentation of sales taxes, the speakers have brought this out well, both from a kind of in terms of pure collection, but also I think, you know, Honourable Minister has made the point about having one's hands tied if things become too harmonised. So I think that's an interesting question about that. Compliance costs, I think the digital is obviously really powerful, and all the examples that you've given showing what a difference that can make in Pakistan with the electronic audit, the e-filing, the use of third-party data. So very powerful there. And the equity considerations that need to be thought about, important. Enforcement you've talked about, and this point about business to consumer, business to business, again, really good food for thought. The tools, the mystery shopper, I've seen this as well very effectively used actually in Africa and Tanzania sort of 17 years ago. So I totally agree with that. So as well as using the high tech, also using the low tech where appropriate to get to the right answer. And I think, you know, in putting all of that together, obviously the fiscal pressures are going to be with us this year, possibly next year as well. So the need for continuous stimulus is a short-term urgent priority, and what KP has done has shown commendable ambition on tax policy. So as well as meeting the challenge of taxes and thinking about these taxes for paying for services, the other side of the question is viewing tax policy as a source of growth. So the questions, and perhaps these are in the question box, I haven't looked at them. How can we structure taxes to boost trade? How can tax policy drive growth in the services sector? How can tax policy help address low productivity and misallocation of resources, and also unleash economic activity? I think these are really important questions to answer. So I guess now over to the questions and the answering, but thank you so much to everybody for organising the event and for giving us some very thought-provoking and important material to grapple with.
Thank you, Annabelle. And for keeping it short, especially for keeping it short. We have a long list of questions, so I am just trying to, I'll try and pick out the ones, so I'll ask three questions in one go, so we can then respond to them in batches. So the first question is by Faisal Rashid. He's asking us, what if provinces like Punjab and KP establish an integrated system with the FPR? Would this help reduce compliance costs and inefficiencies, even if one province does not agree with? And then we have one question by Dr. Anjum Naseem, who's saying, what is the arrangement of taxation on banking and insurance? Who levies this tax? Who collects it? If it is the federal government, how is it shared? What is the mode of collection? Is it VAT or excise? And then we have a similar question, which is asking, well, we don't have the name, certain services relating to financial institutions like banking services, ATMs and mutual funds and stock brokerages have national implications. Each province has a share in it, but only one province collects its tax. My question is how to have a parity in its collection by each and every province. So these are the first three questions.
I think Mazhar can answer the broader structural questions asked by Dr. Anjum Naseem and the other question. Yes, maybe Mazhar, we can go with you first.
We can't hear you. Yeah.
Yeah. So I have to unmute. Yeah. So my sense is that all three questions come back to that the tax base is fragmented and 5 different revenue authorities are collecting it. So then there will always be a problem of, as ministers have also said, that whether a good is excise, is a service or a good, these will be difficult questions. And some of the questions relate to like financial sectors. So even in the countries where VAT is like a harmonized single tax, taxation of financial services is always difficult, for example. So there is no clear-cut distinction what inputs of a financial industries are, what output of a financial industry are. So this is one of the industry which is exempt, and VAT purists, they don't like exemptions. But almost this exemption exists in most of the countries. And the reason is that there are difficult issues to tackle. So now the new thinking is emerging and papers are coming out that there are ways to tax financial services. You can impose VAT on them. But I'm not sure that this VAT on financial services has taken off. And there were few of the questions regarding practical. So if this tax has to function properly in this country, then as I said, we need to have like a very transparent accounting mechanism that which tax is being adjusted in which countries, so that we could arrive at these transfers. And Javed Saab rightly said that right now a movement is afoot at FBR where they're like harmonizing these taxes in a sense that there will be a single return. And that return will also solve these accounting issues. On this return, everything will be accounted for. And after that, there will be like transfers. But again, what Minister Saab is saying, so if you cannot see even how much FBR is collecting, so there needs to be like greater transparency. So ultimately, provinces and federation are partners in this tax, in this effort. And there needs to be greater transparency. And one or two parts of this question related to practical implementation of services tax in Pakistan, which I think Javed Saab will be like in a better position than me to answer.
So let's ask Javed Saab.
So I'll definitely. One of the questions that I was just browsing through is that should KPR replicate the restaurant invoice monitoring system? So obviously, my answer is in the positive, but there are some areas which you have to overcome, and those are the misreportings, non-reportings that we have witnessed. So I think RIMS is not the total answer to that. You have to move towards the documentation by way of incentivizing the taxpayers themselves. So right now we have an experiment. We are going to experiment that if a person pays through a debit card or a credit card, he can enjoy a lesser rate of tax. I hope that will work. So you can couple that restaurant invoice monitoring system or the electronic invoice monitoring system alongside these sort of documentation drives or the incentives, and that will properly work. And on the question regarding the capturing of the financial services sectors and the insurance sectors. We don't really expect experiment on the insurance sectors pretty much, because that's a troublesome sector. We try to levy the tax on the life insurance, and we are facing hurdles in that for the last 1 or 2 years. But on the side of the general insurance, it's okay. It's quite smooth, I think. The other financial sectors like the banks and non-banking financial institutions, which I think may not be cover of the taxation services. But as far as the banks are concerned, they're quite good in paying taxes on the basis of the situation of their bank branches. We thought earlier that there might be a tax shift towards the SRB because of the major head offices are placed there, but that's not the case. We have done a huge exercise on that with the help of the SRB, and we didn't find anything. Same was the exercise which was done in January 2017 regarding the telecos in order to reconcile their outputs, and we couldn't find any contrary to that which has been declared. So these are some of the problems which I think these depends upon the attitude and the behavior of the FPR, I must say. If they are for the integration, most of the things will be solved. As a first step, we joined them in the Strive effort, because Strive was, to our mind, was a very good incentive or very good initiative, which could resolve many problems. Many of the problems were resolved, but by and large, the other provinces are not connected to that system. So I think other provinces should also join Strive. Thank you very much.
Thank you, Javed Saab. Now I will move on to my next question, and maybe we can have Taimur Jhagra Saab respond. So basically, this is a general question saying the economic activity is a balance between what people want to buy and sell. Sales tax is transferred onto the customer, and it will increase inflation and may have an adverse effect on demand and economic growth. So how to address this issue, especially in the post-COVID scenario? And there's another interesting question as well, which is by Faisal Rashid Saab, and he is basically asking if there is a comprehensive definition of services. Our law defines services as something which is not a good, so this could create a number of issues. And one last question, if there is an overall estimation of the size of the service economy in KP and the potential of the tax collection and how much has been tapped.
Okay, so I think a few questions over there. I think the quickest one is there is of course an estimate of the size of the service economy. I think many of the people over here know those numbers, but one of the basis for our increased revenue collections targets was a World Bank study that said, I think a couple of years ago, that the sort of taxable potential was around 20 to 25 billion. And that was based on, wasn't the total theoretical tax, but I don't remember what the proportion that they had attributed to sort of being taxable. And so I think moving from 10 to 17 takes us fairly close to that. I think on the broader question of, one other thing I do like to add on that is, you know, often when we start to get into these sort of reform journeys, we tend to, because most of the actors working on this, either from the bureaucracy or from the development sector, where to an extent academia is significantly represented, few people from sort of the practitioner side, to start to get into a space where you say, let's actually do this broad-based analysis to figure out what the size of the pie is. And as a civil servant in the Pakistan bureaucracy, with due apologies to any ex or current civil servants currently looking. What that typically tends to lead to is as an opportunity to drift towards inaction. And I think in the last year with this growth, right, I think the one thing we've proven is that a bias towards action is better than perfect or granular knowledge of a level that would have taken a long time to build. And you have to use a little bit of gut, a little bit of 80-20 data, and a little bit of common sense to sort of take decisions. Although you have to then get in the detail of those decisions. Now, this question of the balance of the balance of the impact of taxation on economic activity, and in particular in COVID times, of course that's right? And I think if you look at all provinces, I don't really remember much of what Sindh and Balochistan has sort of put in their budgets, but I think the spirit of the sort of proposals that were made in Punjab and in KP are very similar. And we actually hadn't talked much to each other, but I think in the end, you're in very similar directions of trying to, although that does create a little bit of complication in the way sales tax on services comes. And I think the data that Michael showed about the limited impact of that is a fair point. I do feel that with the fact that you have such a large segment of untaxed economy in the service sector, that the signals that you send are actually fairly important. And for example, that's something that I saw with the hotel industry when we were trying to get them to sign on to pay sales tax on services, that it very quickly became a negotiation where they liked the concept. And they liked the concept because what tends to happen with the bed tax, off the record, I know I'm being recorded over here, so this part, I hope is not, is that it creates an opportunity for rent seeking, right? And so you could immediately see that they're trading off both what does or doesn't happen as rent seeking over there with what they have to sort of potentially charge as sales tax on services. Now, that sales tax on services, they did say that, our issue is that goes to the consumer, but we then started to talk about what if the government were to start to market that and also to link the collections, in this case on hotels, to be reinvested in the local economy, and I actually give that money to the local authority, the local development authority, to be able to invest. It creates a win-win for you. Of course, we haven't had a tourist season, but a lot of these things were clicking, and it was very clear to me that the negotiation then was less on consumers' willingness to pay, but more on what they can get away with. And there, I think, whether you have the sort of things that you have to actually keep in mind as you set these is, in theory it is regressive, but in practice, and I was talking informally to a couple of restaurateurs, and they actually admitted, and this will be true once you get out of the sort of few international franchises that they have, where a couple of people admitted to me off the record that yes, the tax is on, the sales tax on service or a restaurant is an add-on, but you know what? In the end, we decide what we pay, and depending on what the rate is, it may be between 20 and 60% of what we're actually due, right? And so it's not always in that case, practically as regressive as it is, because the business owner is quite often treating it in a way as a sort of income tax in the way that they calculate it, whether we like it or not, right? However, when we say charge it as an income tax, A, we don't have that right. B, it actually makes that documentation much more difficult. Think of the bed tax that hotels pay, to the excise department. It's smaller in nature. You make arbitrary slabs. As an excise inspector, I can go and decide what to charge, not to charge, creates 100 opportunities. And I think that the transparency that can come with a simple and ideally relatively low sales tax on services with the right customer education and the linkage of that to sort of eliminating other potential taxes, creating potential incentives. I think given what we have, this is something that we do have to invest in significantly. In the end, in terms of trying to balance how we actually try and offset some of the impact on the economy, we went to sort of looking at maintaining the relatively high level of tax on the 3 or 4 segments that are very formal and where the level of sales tax on service is embedded into sort of the consumer culture over there as well. So whether that is banking or telco, we had a conversation with the telcos about slightly reducing the rate. But the one question that we must say is, right, in terms of that being a pass on to consumers, I did raise the question of, you know, I'd love for there to be better infrastructure and coverage, but we already have some of the cheapest rates, both for data and voice in Pakistan. So it's not just necessarily the fact that data is prohibitively expensive in Pakistan that is holding back further expansion. But that was the first category. The second category was segments where you want to sort of try and push greater consumer activity. So we lowered rates for sort of restaurants, we lowered rates for a bunch of services that are on the high street for the online marketplace. But then there's a third category which is sort of relatively peculiar, where theory sort of goes out of the window in the sense that you have a large bunch of services, and I know this is relatively similar in Punjab, where no one's registered. And I think that came across in the data that Michael showed as well. And it's interesting that the greatest level of lack of compliance on that slide was, I think, by lawyers who are there to uphold the law, right? But we find that lawyers, doctors, there's a bunch of sort of professional categories that don't pay. And practically it doesn't matter if for a bunch of categories where we have literally zero collection, you know, all I really need is to get them registered. We've told them that you don't even need to pay professional tax if you just register with KPRA, and you don't have to pay KPRA tax for a year as well, but let's just expand the base because the opportunity cost over there at the moment is zero. But I think that these categories are probably smarter and will probably still resist. And so our challenge in the untaxed part of the service economy is to see how we can tax, how we can incentivize them to sort of come on board. And I think they are certainly part of what we perhaps haven't done as well as we can. Is this is certainly the only country I've been to. I've lived in a few, worked in a few, but where perhaps there is sort of the least public acceptance of the need for taxation in terms of the circularity of taxation to come back and be spent on the economy. People see paying tax as a one-way ticket to somehow money that government collects and that goes down a black hole. And to some extent, we do have to create the sort of culture where at least people recognize what happens with tax revenue and why it's important. I'll end with this note of, I remember when I was an MBA student in London once being at a Tesco store and an elderly lady being really upset at how cheap, I think something like the butter or the milk or something or the other was, and how unfair that was to the small shop on the high street and the farmer who actually made that, right? And I think we literally know we want everything to be free in this country, and we want the government to subsidize everything, and we don't realize that somewhere that needs to sort of add up, right? And so, for example, in a year like this, the amount of discussion that we've had in the provincial assembly and across the country on not raising pays for public servants when they're 1% of the population, 6% of the labor force, and the only people in the country who've got secure employment this year, I just find that astounding, right? With the level of uncertainty that exists across the country in terms of revenue generation. But I think that's the true reality of where we are in terms of understanding the cycle of money and the need for government to generate resources to be able to invest in development in the country.
Thank you, Minister Saab. I think this is a great overarching view on the systems. On the question of motivation for increased payment of taxes, we have IGC researchers have done some very interesting research, again in the context of Punjab, which they will discuss next week for its relevance for KP. Is indeed does exactly that. It looks at how a property tax reform can be structured around information given to the potential property taxpayer on the kinds of services that are likely to be provided in their area, and how that affects the willingness to pay tax. So I think it'd be very useful to discuss this in the context of next week's webinar. But also this is something that maybe Michael Best, if he increases his engagement here, you can also look at it in the context of the sales tax on services. So back to you, Hina.
Okay, so we have already gone over our time, so I think we can continue this for the next 5 minutes. So I'm wondering if Ghazan is still there, Taimur Saab? Is he there?
He is out on a phone call.
Okay.
Keeping discipline, but that's
okay.
fine. I'm sure he'll walk back in a minute or two.
Okay. So just so the next 3 questions, I'm just going to read them out. What sort of steps are being taken to track online businesses, e-businesses and e-commerce? For instance, merchants sell goods on Daraz, but the online platform itself is providing a service. Similarly, Kareem charges a commission from drivers on each ride. Is that tax? Since COVID is accelerating digitalization, is there any work or framework being prepared for online businesses? And then we have another question. How useful would it be for provinces to establish their own IT savvy tax collectors service in order to reduce reliance on FPR for HR? And one last question. By using a system of positive list of taxable services, the provinces are not collecting tax from many services. Why should they not shift to a system where they have a negative list and collect the tax from all non-exempt services? So I am not sure who is going to be answering that, but maybe Dr. Nabi, you can nominate someone.
Well, I would like to answer. I would like to answer this question.
Well, you go. We need volunteers. Great. But we need 2 minutes to sum up also. So please take about a minute or so.
Okay, thank you very much. Well, actually, the e-commerce is the future of taxation. I was just going through an article at the Bloomberg that very recently Estonia has started issuing the digital nomad visas. So this is very interesting that these kind of services, they have no boundaries. So they can cross border, they can cross everything, and they can cross limits. But the actual problem right now is the government wants to incentivize that sector because they want that this sector should flourish. So Very recently, the provinces have tried their best to provide incentives to them by lowering rates. Apart from that, they have also introduced some definitions. KP was the first one to introduce the ride-hailing service concept, and that was followed by SRB and then PRA. And very recently, during this finance act, in the recent finance act, we have introduced the online marketplace. So the efforts are there, but I must tell you, the future of taxation is in e-commerce. If on the one hand, this is becoming mandatory in the wake of the COVID-19, that most of the commerce is going towards the electronic commerce. On the other hand, we have to be very vigilant how to tap that very sector. So another question was, how can we strengthen our own IT expertise in order to dispense with PRAL and FPR? That's the question, which is very relevant. We have been trying for the last 5-6 years to establish our own IT. Rather, we gave the idea to the government that there should be a Punjab Government Revenue Automation Limited, a company, which was not accepted at that time. Instead, they allowed us to constitute a small IT cell, but that's not the solution. So the provinces, at least, they should come across. They should sit together and try to evolve their own IT system, which is not heavily dependent on PRAL. I tell you honestly that this is the solution.
Yeah.
So this is all
Thank
for
you.
me.
Thank you, Javed Sahab. I think what you have raised is an extremely important issue, and this is something tax administrations will have to worry about a lot in the coming days. I think COVID-19 has demonstrated how effective the use of the internet is in conducting conversations of all kind, in facilitating business activity. For example, telemedicine, which everybody thought would be resisted tooth and nail in the United States, is now very much in vogue. So a lot of these services are likely to go online as a result of this experience with COVID-19. And what that means for tax administration, the challenges it poses, is a whole set of new issues that I hope yourself and people like Michael Best, who've been working with the tax administration, will have to grapple with in the years to come. Let me now request Cousin Jamal, advisor to the Chief Minister, who was our prime engager on the webinars, and we'd like to thank him for facilitating this one, but also for the next one on the property tax that we'll be presenting next week. So may I request Advisor Saab for some words from you?
Thank you, everyone, and thank you, Dr. Nabi. I think everything's already been said and covered, and it was a brilliant session. I was just glad to help as much as I could. And where on the KP side, like Mr. Saab mentioned, we're very excited. We've already kind of made one of the things that was missing, that was always talked about, was this political will to kind of make revenue generation and the taxation system a priority area and kind of improve that. That we've already done. Luckily, there is a lot that's already been done in other parts, both in terms of the developing world or even in Punjab and all, that we're looking to learn from and then even go beyond that. And we're excited to have this kind of distinguished panelists and people, experts in these areas to work with them, and we're looking for their support because obviously there are always limitations within the government. And so I think now that that will is there to kind of work together, we look forward to this support and use this COVID-19 as an opportunity, in fact, to make the kind of reforms that in no normal circumstances we might have seen some resistance towards. Thank you.
I think the real manifestation of will be when Ghazan goes to his constituency in the former tribal areas and announces that in the greater national interest, Orakzai is entering the tax net. So waiting for that show of leadership sooner rather than later.
We have a 10-year break for now. So.
I think Ghazan will be able to do this with much greater chances of success, Jagra Saab, if you can help build a road in that area. Okay, with that, may I request Annabelle to say a few concluding words?
I think really it just falls to me to thank everybody for their time, the speakers and all of those who've participated. It is an incredibly complicated and technical area. I think you've given some really good food for thought. And as I said earlier, I think the fact that this is doable is really important. In Pakistan, we've got some very good experience, some real expertise. And I think the points that came out in the discussion now about COVID and how the COVID context isn't always a disadvantage, how in this area it really could be an advantage to us. Okay, it's created a bigger problem, but let's look and see how this context where everything's moving more online to really accelerate progress. So I would just want to thank sincerely all of you in the research community for all you're doing to enrich the thinking, and congratulate the politicians, the implementers who are really trying to grapple with this challenge, which is so important for the trajectory of the country. So thank you all. Thank you to the IGC. Thank you to CDRP. Thank you to everyone who's arranged this evening. Great job. Thank you very much.
Thanks, Annabelle. Just in parting, at a small level, Jagra Saab, we, the CDPR and IGC, we are actually engaged in all 4 provinces, but coming from the policy research angle. And in a small way, we are helping bridge this coordination gap that we have. We are bringing interprovincial experiences. In a webinar we conducted with Balochistan a couple of weeks ago, we took the examples of KP and Punjab to Balochistan. Now we are bringing the example of Punjab here in KP. So there's a lot of mutual learning that can be done across the provinces. And what we are hoping is that we'll use the CDPR platform to do that as a complement to, of course, the institutional level coordination that the federal government has to do. So this is a small contribution in that direction. Also, as I conclude, I think in all 3 of the panelists today, Mazhar Wasim, Javed Ahmed Saab, and Michael Best, these are great resources for KP as you deepen your reform program, both for learning in terms of other country experiences, also other provincial experiences. So it would be an outcome of this webinar in terms of greater engagement with some of these people will be fantastic. Thank you. And thanks to all the participants. And we had 80 participants at our peak, which is not bad for a webinar. And we have 53 even as we close. So thanks to IT, we can reach a much larger audience than we would have been able to if we had just done it in Peshawar. Thank you very much.